us from the Saudi Arabia, Pakistan, and other regions. On behalf of ICM International and the ICMA KSA Branch Council, in collaboration with the National CBD Committee, I warmly welcome you to today's webinar on integrating IFRS S1 and S2 into financial reporting requirements, challenges, and best practices. We are truly honored by your presence and grateful that you have taken the time to join this important professional learning session. As you all must know that since the United Nations has adopted the Sustainable Development Goals, and few years ago in the COP conference, the Paris Agreement has reached. So sustainability, development, CO2 emission, and these type of issues have become a central focus of the global leadership. So one of the important tools available for the leadership was that they can make business entities responsible in terms of their financial reporting, that they can report on the sustainability related risk, CO2 emission, environment protection, etc. Okay, so one of the very important question that comes to a financial accountant mind, that how these risks can be measured and how they can be reported, what are the corporate strategies, what are the responsibilities of the board of directors of a company to devise the policy related to that, and most importantly of all of them, that are we really prepared to report on those risks and integrated financial reporting. So I think IFRS S1 and IFRS S2 represent a significant step forward in integrating sustainability disclosure into mainstream financial reporting. Today's webinar aims to provide very valuable insights into the practical application of these standards, including the key requirements, implementation challenges, and best practices that organizations can adopt to strengthen their reporting framework and support informed decision making. We are very privileged to have with us distinguished speakers who bring extensive knowledge and practical experience in finance, sustainability reporting, corporate governance, and ESG integration. Uh, with that, I would like to introduce our today's host and speaker, Mr. Wasim Ahmed, who is a very seasoned finance and corporate leadership professional with over 30 years of experience. Mr. Wasim is a current member of the KSA Branch Council, and he is a founder and former chairman of the KSA Branch Council as well. He is currently partner and CFO at White Pearl KSA and has been recognized as Best CFO of the Year 2024 and Most Impactful CFO 2025. With that, I would like to hand over it to Mr. Wasim, and also I would request him to introduce our today's main speaker to the audience. Wasim.
Thank you very much, Hamad, for introducing me and giving the valuable words. First of all, welcome to all the members who are witnessing this webinar on a large number, and a lot of people are going to join very soon. Uh, if you remember, those of you who have attended last week's webinar on AI from US Branch Council, I mentioned that now we have to shift our mind from numbers to other areas as well. That webinar was on AI, so I talked about AI, that how we can use. You can still watch, the recordings are available. But today's topic is S1 and S2, sustainability, risk, governance. They are the key and they are the future of every organization. So we have to shift our mind from numbers to those areas. And luckily, we have Mr. Muhammad Yusuf Khan, who is a seasoned professional and expert in his field. Before I invite him, I would like to give a little bit presentation, maybe like 20 minutes, where I will explain that how this area is important for us and how we have to implement these areas in our reporting structure. Without wasting of the time, if I can share my presentation, just a second. Yeah. Can you see the screen? Anyone can please? The chat is open, I think, for all. Can anyone type in the chat, please?
Yes, sir, you can, and your screen is visible, please.
Okay, great. So understanding the IFRS S1 and S2 integration sustainability into financial reporting, a CFO prospect on the future for corporate reporting. This is our topic. This is about my introduction, which has already been done. So I'm skipping this slide. Why sustainability reporting has become essential? This is the question, that why we have to think that sustainability and governance and risk, this is not our area, this is someone else's area. No, it is wrong. This is very important. Why? Because uh, all the investors are demanding this, that how you are sustainable, how is your sustainability reporting, what you are reporting. Luckily, as you know, that I have worked as director of finance as well in Pakistan for 5 years, and I got the honor to submit the first sustainability report of ICMAP back in, I think, in 2015. No, back in something, yeah, 2015-16. I don't remember exactly the year, but I was the person who led this, and we were the first educational organization who published this report in Pakistan, and this honor goes to us. So I know this area very well. What happens that the investor are demanding that how you are sustainable, because they want to see that are you following the environmental issues, are you tackling those issues, are you taking care of the risk. So investor demand is this forward-looking information beyond historical financials. They want to see the forward-looking. They don't want to see the historical things where decision making used to be made. Capital access is ESG performance increasingly tied to financing and investing decision, because this led the investment decisions and capital access. Regulatory pressure, because now, as Hamad explained, that current UN laws are not allowing to do business, and they are taking care it a lot, and they are pushing the governments to do these compliance. And enterprise value, sustainability directly influence risk profile and long-term valuation. It gives a very positive impression if you are following the sustainability reporting and following these compliance. So this is very important. Then uh, how this moves from numbers to the what makes ISSB think that this should be the part of the reporting structure. This is how they think that the CRS from the CRS, the voluntary community reports, they started thinking for ESG structure metrics across framework, then TCFD, climate focused disclosure recommendation, and then ISSB implemented S1 and S2. These all the terms will be explained by our main speaker. So I'm just quickly going through and actually warming you up for this upcoming main webinar presentation, which Mr. Yusuf is going to present. The scope and structure of the standard is we have S1 and S2. S1 generally it is taking care of general sustainability disclosure, covers all sustainability related risk and opportunities that could affect investor decision, including climate, biodiversity, water, human capital, supply chain, and cybersecurity and governance. And S2 is dealing climate related disclosure, which includes require a disclosure of greenhouse gas emissions, scenario analysis, transition planning, and climate resilience. So these two standards are dealing this, which we will discuss later on, and Mr. Yusuf is going to tell all the details about this. The four pillars which IFRS 1 and IFRS 2 is based are governance, strategy, risk management, and metrics and targets. How the entity governance bodies oversee sustainability related risk and opportunities. This is a question in Saudi Arabia. These areas are very much taken care, and good companies are really thinking about this, and they are shifting their minds from traditional thinking to the governance and strategy and risk. Recently, I have made one regulatory audit where I checked governance and all these things, and this was very well welcomed by Capital Money Authority and the company itself. And the findings which I made about the governance, they have implemented it properly. So in Saudi Arabia as well, these things are really taken care. Then the strategy, how sustainability, risk and opportunities affect entities' business model and strategic planning. This I will tell you that how this S1 and S2 are going to hit our other IFRS, which we are implementing in our reporting. Risk management is also there, and this also I'm going to tell you with the particular IFRS numbers that how it is going to implement, and metrics, targets, performance indicator and target used to measure the and manage the sustainability outcome. This I will give you a case study, and this case study will tell us that how S1 and S2 are important to have a decision and attract the investors. This is the slide I was talking about, that linking IFRS sustainability standard with IFRS accounting standard. First going concern, which is dealt in IS1, and later on it will be shipped to IFRS 18. Access material uncertainties. You have to see that if anything is related to any like compliance issues that could create problems, so it will be parked as going concern, and you have to see that if the company is facing a going concern issue or not. Then the asset impairment, we know that we do impairment of the assets while we make the reporting, and IS 36 is dealt in that. So we have to revise recoverable amount. This will be covered again in the case study, which I'm going to tell soon. Environmental obligation, IS 37, recognize provisions when criteria are met. In the IS 37, we have to make provisions and we have to make provision accordingly. If any environmental obligation, we have to manage, we have to take care. Financial risk, IFRS 7, enhanced risk disclosure. Similarly, expected credit loss, IFRS 9. If any environmental issues creating your expected loss, so you have to deal and you have to implement it in IFRS 9. Fair value, IFRS 13. Leases, IFRS 16. And segment reporting, IFRS 8. And subsequent event, IAS 10. If anything happened after reporting, subsequent event you have to deal, and you have to take care if any climate change or any risk area is concerned. This is a case study, small case study, that there is a company, Green Steel Manufacturing Limited, and it is a steel manufacturing operations are 3 manufacturing plants. This is export-oriented business, high energy consumption, and coal-fired productions process are used to manufacture. Climate-related challenges are introduction of carbon taxes, rising electricity prices, pressure from customer to reduce emission, banks requiring ESG information before approving financing. Now, banks are also very much concerned if they are giving you a loan. They ask these questions, and it increase or decrease your credit worth if you are following these S1 and S2 reporting standard. Management response is invested currency units 350 million in energy efficient technology, install solar power systems, implemented supplier sustainability assessment, set a target to reduce emission by 40% by 2032, and integrated climate risk into enterprise risk management. What happened that financial reporting impact property, plant and equipment IS 16 is affected because you have to capitalize the new energy impairment, tested the old coal based asset. If it is really outdated, you have to impair it, and this will hit your bottom line. Provisions recognize environmental obligation where required. Fair value updated assumption affecting valuation under IFRS 13, and sustainability report, which we are already discussing, that you have to see S1 and S2 standard accordingly. So this is one practical example, and you can apply it in your particular industry, your work, that how it is impacting and how it is really doing this. Financial statement and sustainability disclosure should tell one consistent story. It should not tell the different dynamics. Otherwise, you have to adjust it in the numbers and make your reports accordingly. IFRS 1 and IFRS 2 are not about producing another report. They are about improving business decisions. This is the roadmap of IFRS 1 and IFRS 2. Obtain board commitment, then conduct a gap assessment, identify material sustainability risk and opportunities, strengthen governance and internal control, build reliable data collection system, perform climate scenario analysis, prepare integrated sustainability disclosure, and finally, continuously monitor, review, and improve. And they are the challenges. You can read it if while you are implementing these in your report. Their journal, you can read it. I just want to waste time. The 5 messages, important key messages. Sustainability report is now a strategic financial responsibility. IFRS, just a second. IFRS S1 establishes the general provision for sustainability related financial disclosures. IFRS S2 focus on specifically on climate related risk and opportunities. Sustainability assumption should be consistent with financial reporting under IFRS accounting standard. Organization that integrated sustainability into strategy and decision making are better positioned for long-term value creation. Sustainability reporting is not about predicting a future, it's about demonstrating how prepared your organization is for it. That's all about me. Before I wind up and hand over mic to Mr. Mohammed Yusuf, I would like to share another slide, which I would like to tell you about my upcoming course, IFRS training. Just a second. I think some issues. Just a second. Yeah. Recently, I'm going to have a course, a complete course. If you want to learn about IFRS, this course is going to happen in Karachi, Lahore, and Islamabad. At the moment, I'm in Pakistan. It will be a physical course. So if you are interested, you just contact me because I'm going to have this course. Those of you who are really missing IFRS and who want to be updated from all of IFRS, this is the certification in IFRS. So this is just a small announcement. Now I would like to hand over the mic to Mr. Mohammed Yunus Khan, who is also our fellow member of ICMAP and running his own firm and have conducted various efforts in environmental changes. And he is really, I'm really thankful to him that he joined us for this very important webinar, where we today we are going to witness and we are going to learn a lot from him. Over to you, Mr. Muhammad Yusuf. I think you have to unmute, Mr. Yusuf.
सर ये एयरबड या एयर एनफील्ड का इनको निकाल दे सर।
Now we can hear you, Mr. Yusuf.
आवाज आपको आ रही मेरी?
Yes, we can hear you. Yes.
जी जी, आ रही है आवाज, आपकी आवाज।
जी आवाज आ रही है आपको?
जी जी, आपकी आवाज आ रही है।
अब आ रही है, अच्छा। वो आवाज तो यहाँ पे सिस्टम में करनी है, तो नाउ इज ओके, द वॉइस इज audible, I am audible.
Yes, you are audible. Yes.
Thank you. So I was telling the management response that they have done a lot of work, especially with Sahab and all the members of the Saudi Branch Council. I'm thankful to all of you for providing me an opportunity to present on this important.
Yusuf, just extend the screen, press F5 or something, so we can see the screen properly.
Okay, that is fine.
Yes, perfect. Please continue.
So, without any further delay, as the time is short, I would like to introduce that we are now going to start our main presentation. That there would be two parts of this presentation. First part is the understanding and integrating the International Sustainability Reporting Standard IFRS S1 and S2, and I have divided it into two parts. Before going to that, the first part is I have focused because we are focusing and addressing the Saudi Arabia market and the GCC market. What is the landscape of Saudi Arabia and the Gulf countries? I will touch upon it, and then I will discuss and the IFRS S1 and S2 without any other introduction to sustainability and the risks which the developed countries have posed on all entire world. So part one is the sustainability reporting landscape in Saudi Arabia and Gulf regime. So it is very interesting to note that Saudi Arabia has taken and issued the VN 2030, and they have issued Saudi Green Initiative. So under this, they have indicated several goals. First goal is they want to reduce the carbon emissions, which is the main cause of global warming, by 278 million tons by 2030. Then they have also a great goal of planting 600 million trees by 2030 as part of their 10 billion trees long-term program. And they want to reach 50% renewable energy mix by capacity by 2030. And they also want to achieve the net zero emission nationally by 2060, which is 10 years beyond the Paris Agreement goal of achieving the net zero by 2050. So anyhow, it is good. They have set their targets according to the national determined contribution, NDCs. And now Saudi Arabia has also issued core sustainability regulatory framework. They have adopted, like Saudi Exchange, the Tadawul, ESG disclosure guidelines have been issued. They have launched to help listed companies to report on ESG performance, offering a structured framework to attract institutional investors. Then, the national standard for sustainability have been issued. They have been developed by the Ministry of Commerce, and these standards help domestic businesses align their disclosure with both national economic objective and global baselines. And then CMA has green debt instrument guidelines. Capital Market Authority, CMA, has issued the green debt instrument guideline, so that the debt and instruments are issued on the basis of the green investments, green sukuk, social and sustainable linked bonds and sukuk. Then Saudi Green Initiative also leading. Then they have adopted, Saudi Arabia has adopted all the global financial and sustainability reporting standard, which include IFRS S1 and S2, increasingly prioritized by the Saudi exchanges. These ISSB standards regulate general sustainability and climate-related financial. Then they have also adopting Global Reporting Initiative, GRI, which is the main framework globally adopted to disclose not only the financial impact for the investor, but also the materiality impact and the climate impact on society as a whole. Then sustainability accounting standard, SASB standard, they have adopted to go for SASB standard. SASB standard are very extensive. They are industry based, and SASB standard have issued 77 industry based standard, which if we got time, then we will explain them. Then Task Force on Climate-Related Financial Disclosure, TCFD, they have been adopted, which is the base for the adoption of IFRS S2, and they have also adopted TNFD, Task Force on Nature-Related Financial Disclosures. Then the operational and assurance standard, they have also adopted ISSA 5000, which is Sustainability Assurance, formally adopted by Saudi Organization for Certified Public Accountants, so VPA, to enforce and ensure rigid, independent, third-party audits on reported corporate ESG data starting in 2027. So the companies in Saudi Arabia have to get ready to incorporate the audits under the ESG audits under the ISSA 5000. Then they have also adopted ISO certification standard, ISO 50001, which is related to energy management. One important question is ESG reporting mandatory in Saudi Arabia right now? Anybody can tell me? The answer is simple, is no, it is not mandatory. However, the market pressure is already outpacing the regulation. In 2024, 94 the Tadawul listed companies published sustainability reports, up from 81 in 2023. Among the top 100 companies by revenue. And the top leading companies in Saudi Arabia, which are reporting on sustainability, are from among minerals and chemicals entities like SABIC. They are reporting and leading the sustainability reporting. Then in energy sector, Saudi Aramco and ACWA Power, they are reporting on ESG. And banking and telecom, STC Saudi Telecom Group company is the strongest and most advanced ESG reporter, which is reporting since 7 years, followed by Mobili and Zen. Then ISSB adoption is also underway. The main body, Saudi Society of Certified Public Accountants, they have reviewed and they are ready to adopt TCFD and ISSB standards. So this is another comparison between the landscape of the regulation in Saudi Arabia and versus the UAE. The regulating body, on the left side, you can see the dimension, what the UAE is going and Saudi Arabia is doing. Ministry of Climate Change and SCA plus ADX in UAE, and in Saudi Arabia, CMA and the Tadawul. In current legal status, the UAE is quite advanced. Their federal climate law has enforced, and while in Saudi Arabia, the CMA issued in 2019 and the Tadawul guideline were issued 2021, but they are not enforced as in UAE. Green debt disclosure, UAE it is mandatory, and while in Saudi Arabia, mandatory from 2025, CMA, GSS, SLB frameworks. ISSB adoption trajectory towards IFRS S1 and S2 is underway, as Saudi Arabia is also going to implement and enforce, but the date is not confirmed. Scope 1 and 2 emissions. These are the GHG emissions, scope 1 and 2. They have implemented in UAE since by 30th May 2026, but in Saudi Arabia, GHG emission 1, 2 are not yet mandated. Likewise, scope 3 emissions, they have in UAE, they are anticipated to be adopted by 2027. In Saudi Arabia, they are not yet. The non-compliance penalty in UAE, they are very high, 50,000 AD to 2 million AD, and double on repeat non-compliance. In Saudi Arabia, it is not yet mandated. The penalties are not imposed. Large cap benchmarks, ADNOC, DP World mandatory. So in Saudi Arabia, Saudi Aramco, SABIC, voluntary TCFD leaders. While this is the brief comparison, I would like to present some glimpse and extract from the original report which have been issued by the UBL. The UBL ESG report, I would share some pages from it. United Arab Emirates, because they have presence in UAE and Qatar, so they have adopted the regulatory regime related to the climate change and mandatory ESG disclosure. The UAE has introduced illegally binding ESG and climate risk reporting requirement through CB-UAE, Principle on Sustainability Disclosures, and Regulation on Climate Risk Management, as well as Federal Decree Law number 11 of 2024, which requires preparation of GHG inventory and emission mitigation and adaptation measures. So they have adopted the UAE complete ESG disclosure guideline. Similarly, the UBL has also adopted the Bahrain ESG module, which mandates that banks integrate ESG consideration into their risk management framework and disclosures. The UBL has aligned its ESG policy with the CBB ESG module, and disclosure requirements are met with annual ESG report. I will be sharing these slides with you, and you can go through the details. But this is the crux that they have adopted the Bahrain regime on ESG governance and reporting. Likewise, Qatar and Bahrain regulatory context, they have also adopted the full ESG requirement, and they have also reporting on IFRS S1 and S2. The UBL has implemented ESG policy in line with QCB requirements. All credit and investments proposal undergo mandatory ESG due diligence and climate risk assessment, including physical and transition risk, are embedded in risk management framework. So these are the main glimpse of the regulatory regime which the UB has adopted throughout the Gulf countries and so the regime. So this is an overview of the sustainability regulatory regime in Gulf countries. Now we proceed toward the second part, which is the main part of this my presentation, understanding sustainability and climate-related financial disclosures by applying IFRS S1 and IFRS S2 as part of financial reporting. So this is, I would be presenting the whole IFRS S1 S2. Initially, I have divided the presentation into two parts. IFRS S1 was separately prepared and IFRS S2 was separately. But keeping in view the short time, I have merged both the IFRS requirement, and this is the core slide which shows that how we will be proceeding. First part is prepare module, and which shows that what is the case for and purpose of sustainability reporting, why we should, and how has the reporting landscape evolved. And the second module is align, how the companies have to disclose their disclosure about on a global baseline in line with IFRS S1 and S2. How can additional disclosures be integrated to meet geological, sectoral, and regulatory requirements? And third module, identifying the evaluating, integrating sustainability related risk and opportunities implementation module. This is very important. And lastly, the communicate module. There are certain Zoom polls. I would like to request Mr. Shafiq to please present the first Zoom poll. You can answer the Zoom poll so that you can check how well you are undergoing and understanding the presentation. Meanwhile, I would like to present that, yes, what are the your reason for disclosing sustainability related information? Why you are here to attend this webinar, and what are your objective? This Zoom poll is for you to answer. Is it, are you reporting for the regulatory purposes, regulatory requirement, sharing management objective, societal expectation, investors' interest? Other indicate in the chat, and or you can say we are not disclosing the sustainability information yet. You can choose the relevant answer. So this is the glimpse from World Economic Forum. Why we are so concerned, and the global leaders, especially Europe, America, Japan, Germany, and they are focused on sustainability reporting. There is a big, huge history of evolution of the sustainability standard, which I have not discussed in this presentation. However, briefly, I would like to tell you that World Economic Forum has gone through the risk precipitation survey 2023-24. It shows that the planetary boundaries, out of 9 planetary boundaries, the global warming has already damaged 6 out of 9 planetary boundaries, and we are damaged the our globe and Earth and our nature badly, which includes that pollution is a big threat. Climate has raised and gone beyond its boundaries. Then biosphere has been depleted, land use has been depleted, fresh water has been depleted, and it is under severe threat. Then nutrients, we are losing nutrients on the natural resources we are losing. However, certain boundaries are still safe, but you can see on the right side, there are extreme risk events. In the 10 years, what would be the main challenges for the businesses? There are extreme weather events. 5 green lines out of 10 big risks in the coming 10 years are the major challenges. There are extreme weather events, critical change to Earth system, then biodiversity loss and ecosystem collapse, the natural resource shortage. These and like pollution. These are the main threats that we businesses have to counter in order if they have to survive. So another important, this slide shows that what businesses are expected to do as compared to just the compliance on the reporting on the financial matters. Now there is a huge challenge which the businesses are faced, because nobody can survive without nature and the natural resources. And businesses were independently using the natural resources from the Industrial Revolution, which was started from 1750 up to the current century. But they have depleted the natural resources to such an extent, as I have told, that the planetary boundaries have been damaged. Paris Agreement set the goal of global warming up to 1.5 degree by 2050. But you can imagine, the world has already reached the 1.5 degree by 2030. The total budget which was allocated, carbon emission budget, is around 160 billion tons. That has been already reached, and only 3 years are left to reach the 1.5, and we will be touching 2 degree or even higher. So these are the risks I have depicted in this picture, that TNFD has reported that businesses depend and businesses impact nature. So these dependencies and impacts create risk and opportunities on which we have to focus. The business had to focus what are the transition and physical risks they have to address, and they have to mitigate, and they have to work out to create opportunities to if they want to survive. So this is the picture. Businesses depend on nature, and the nature is providing all the resources to the business. So we have to take care of our nature. So this was the overall introduction about sustainability, and now we will starting the first part of going into the IFRS S1 and S2. This is the prepare, building a solid foundation for knowledge. So first part is how to prepare for the get ready for implementing IFRS S1 and S2. In the prepare module, we will discuss three aspects. First, purpose, why we are going to report on sustainability, what are the objectives, and then landscape, what is the regulatory landscape on which we have to use the standard. Then global baseline, we have to address our global sustainability frameworks and the standards. In the prepare module, the case for and market drivers for sustainability reporting. We will be seeing why we are going to report on sustainability. What is the importance? What is the purpose of our going into sustainability reporting along with the financial reporting? So this is a brief picture from a principle of responsible investment survey. So they have reported, worked out from 2006-7 up to 2023-24. So this shows that more than over 5,000 signatories have signed toward financing toward the climate and low carbon emission projects. The financing priorities of the investment has been shifted. So this shows a high level of the inclination towards the sustainability and low carbon projects. The investors are focusing on the traditional towards the climate and sustainability related low carbon emission projects. They would finance on these. So this is another landscape. The HSBC issued Sustainability Pulse survey. It shows that the 500 global institution investors across 12 markets, and it shows that 96% of the institutional investors globally believe that climate and environmental issues will be important to their organization's investment strategy within the next 3 years. Likewise, investor interest in sustainability driven by its relevance for long-term value creation and strategic reliance. So this is the crux of 500 global institutions. They are focusing on their investment strategies toward the climate positive and away from the climate negative investments. So this is another PRI survey. There's the 700 signatories which are contributing 68 trillion dollars. They are focused on their investment just toward the climate positive initiative. 166 focus companies, 75% have net zero commitment, 50% in March 2021. Likewise, 92% have some level of broad oversight, and 91% have aligned with TCFD recommendation. Then this is a summary of reason why you are going to disclose information. Mr. Shri, can you launch the second question of the Zoom poll? Yes. We have discussed certain standard. If you can highlight which financial reporting, which sustainability reporting standard are you using in your companies? Either you are using IFRS S1 or S2, either you are using GRI, Global Reporting Initiative, either you are using Integrated Reporting, IR, or Sustainability Accounting Standard Board, SASB, SASB standards, or TCFD standards, or any other regional standard, the European standard, ESRS, or EFRAG, or any other standard which you are using, or if you are not using, state none. So this will help us to check how and where your reporting landscape is currently exist, and so that we can identify our gaps and go for our implementation in a better way, in a better planned way to assess the risk of the climate and sustainability and prepare for the next business level. So generally, the people, or why they are disclosing, why you want to disclose the sustainability reporting on the compliance. Either it is because of the compliance you want to have with the regulator, or differentiating with your peers. You want to be differentiated, and you get the strategic advantage over your peers by disclosing the sustainability reported related risk and opportunities. And then there may be societal expectations. They demonstrate accountability and align with peer practices. You want to be transparent that we are using and emitting this much GHGs, and now we have to reduce it. Explain contribution towards sustainable outcome. Then if you are committing toward the national determined contribution, and this is under the Paris Agreement, and or respond to urgent demand from investors, or you are forced to respond on the demand of the investor, which is a big issue. One thing I would like to highlight is that the IFRS S1 and S2, these standards are mainly focused on requirement of the investors. They are investor-specific standards, and the lenders and the contributor of the capital, you have to disclose the material information which is relevant to the investors for their decision making. And this is the core purpose of the IFRS S1 and S2. So this is the brief presentation about the actual work which the Friends of Environment is doing, and which has planned a project. Thank you for your poll. It is going to, now you can see how we have developed an idea of our sustainability implementation, how we can reduce the huge billion tons of garbage into zero without any cost. So you can look at this brief video. So thank you for watching, and I hope you have enjoyed this video to make you aware of what how the Friends of Environment is working toward the reduction of the waste. Then there is a serious impact on our financial statements because of the climate and the sustainability issues. The biggest threat which we can see is that the change in the demand for products and services due to shift in consumer preferences or changes in production capacity from input disruptions or impacts on workforce management and planning, etc. And likewise, there are changes in expenditure. For example, changes in operating costs, R&D expenditure, required cost associated with deploying new practices and processes, changes in production cost, and changes in workforce cost. I would like to highlight these two aspects on financial performance with an example that if, for example, Toyota company or any other car manufacturer, they are facing a challenge of consumer demand of shifting from the fossil fuel based engines toward the electrical engine EVs. So this is a critical demand which the companies are facing, and they are seeing that in the next coming 5 to 10 years, they have to shift and to change their production and their business life cycle and their strategy towards production and sale of EVs and electric vehicles instead of the traditional fuel based engine. So this shift from based on the climate change and the global warming perspective, the consumers are now shifting towards the low carbon emitting products, and one of the products is EVs. So because of this prospective change, expected change in the business, they are shifting. And if they are shifting, then you know that you have to change the whole manufacturing process. They have to do R&D to replace the existing machinery. Then there will be, because of this, there would be impairment of the existing assets, and you have to report under the IFRS 16 and other related financial reporting standards, the R&D cost and other costs you have to report IFRS 1, for example. So these risks have to be reported, and these costs have to be reflected in your business plan and your financial report as side by side with your financial report which you are issuing. So the sustainability related, the risk and the cost associated with the changing toward the low carbon economy, the transition risk and the physical risk. To avoid them, the cost which has been incurred, you have to reflect for the investor information. Likewise, there would be effect on your financial position, the sustainability and the climate issues. They are impacting your financial position or balance sheet. As I have told that if you are changing the manufacturing process from the traditional fossil fuel engines toward the electric vehicle engine, the whole assets which are associated with the production processes and all the other related processes we have to change. So this would result in impairment of asset, replacement of asset, and changes in asset. So you have to change your balance sheet. This would be a huge impact on your balance sheet. So likewise, the cost of financing these projects and cost of capital, this would also have impact on your financing and the equity or the other available financing, because the investors are looking if you are going towards nature positive or negative projects. So if you are going towards, as I've told that Saudi Arabia has issued the green bonds under their green initiative. So you will be getting lower cost of capital if you are investing in nature positive projects. But if you are not nature positive, but you are increasing your carbon emissions and you are violating the green initiative and the determined NDCs of the Saudi Arabia or other countries, then you have to be punished with a higher cost of capital by the financial institution. Like I have given the example of UBL, they are having a strict scrutiny on the projects if they are going to the carbon intensive or carbon neutral projects. So this would be increasing the cost of capital if you are really focusing on the low carbon projects. This I have already discussed the evolving risk environment, because the World Economic Global Risk Report of World Economic Forum has shown that in the coming 2 years there are two extreme risks, 4 and 9 pollution and this. But in coming 10 years you have to face 10 big risks related to climate and environmental. So you have to transform your business toward the nature positive and sustainable projects. The second part is a landscape evolution of the sustainability reporting financial disclosure, how you have to report your sustainability reported related risk and opportunities, keeping in view the available global frameworks. So this is another Zoom poll. Ishfiq, can you launch in the Zoom poll? I think please hold on. This you cannot. This we will share later on. We have discussed this already. And now we are coming to the structure of the ISSB. Now we are discussing international sustainability reporting standard and where these stand now. I will tell you that the International Financial Reporting Standard IFRS Foundation, IFRS Board has issued established two separate standard setting bodies. One is IASB, International Accounting Standard Board, and the other is International Sustainability Standard Board. So IFRS Foundation has issued and maintained two separate bodies, regulatory body, and this body, IASB, was established in 2001, And after 22, 23 years, in 2021 or 2022, the IASB, International Sustainability Standard Board, was established to address, and they have issued the two standard IFRS S1 and S2. These are managed by IFRS Foundation trustees, and they are also responsible to the Foundation Monitoring Board. So this is the global perspective of the IFRS S1 and S2, that they are being managed in line with the IASB. So this is the global landscape of the evolution of the IFRS reporting standard. As the diagram and picture show, that there were several standards which are in place for the sustainability reporting. They are issued on various time from 2020, 2001 up to date. So, like for example, TCFD. This was established task force on climate-related financial disclosures. This has issued their recommendation, but now these recommendations have been taken over by the IFRS Sustainability Standard Board, and in 2023 this has been disbanded and taken over by IFRS Sustainability Standard Board. Likewise, CDSB Climate Disclosure Standard Board. This was an independent standard setting board which was along with Integrated Reporting Council, IAR, International Integrated Reporting Council, and SASB, Sustainability Accounting Standard Board. These all were merged into Value Reporting Foundation, VRF, and these were consolidated into IFRS Sustainability Board. Likewise, CDP has also aligned its the questionnaire, climate disclosure questionnaire, and in line with IFRS S2. And these are, likewise, there is another important framework. This is TPT, Transition Planning Task Force. This has been developed to help companies to transition from the traditional business to other low carbon economy. And these all have been merged into IFRS Sustainability Standard Board. And however, there are two other standards, GRI, which is not merged into IFRS board, but it is working in line with IFRS standard board. They are working in conjunction with each other, in coordination with each other. They are not conflicting, but rather they are building blocks to use the IFRS sustainability standard reporting standards. GRI has aligned the IFRS S2 with their GHG emission standard. Likewise, there is another framework which is greenhouse gas emission protocol, which is also independent, but it is also in line with the IFRS sustainability standards. So IFRS Sustainability Standard Board, ISSB, it has taken over all these frameworks, and they have issued a global baseline and unified standard, IFRS S1 and S2, based on the basis of all these standards. So you can look at the efforts which have been put by these global frameworks, and now we have a global baseline to report on the sustainability related issues. Now moving from, I would like to explain that how the transition is done from various frameworks to ISSB. Likewise, this is the TCFD, which culminated in July 2023, and IFRS Foundation assumed responsibility for monitoring and climate-related disclosure progress. IFRS S2 incorporates the TCFD recommendation, the 4 pillars of the governance strategy, risk management, targets, and metrics, and these have been totally based on the TCFD recommendation. In some cases, IFRS S2, however, there are certain distinguishing factors of IFRS S2 as compared to TCFD. It has different wording to capture the same information as TCFD, and IFRS S2 requires more detailed information as compared to TCFD, and IFRS S2 provides some additional requirements and guidance. So, although TCFD has been disbanded, but its entire framework has been adopted by IFRS S2. now setting a global baseline, as I was told that these standards have been merged to report on the for the multi-stakeholder need in a uniform basis. So all the standards, the different frameworks have been clubbed and merged into into a standard framework, reporting framework, which has issued IFRS S1 and S2. What is the purpose of ISSB standards? The comprehensive foundation of disclosure of global jurisdictional adoption, common language for comparable, decision useful disclosure, and designed to meet the investor need across global capital markets. So therefore, all these various frameworks have been merged and consolidated into a standard ISSB standard, so that they provide a global baseline for reporting for the investors, whether they are in Africa, whether they are in Europe, whether they are in Asia or Gulf countries. They are now reporting on standard standard language and standard uniform basis, so that investors can make better decisions. So global backing for global standards. So the standards IFRS S1 and S2 have also been recognized throughout the world. So ISSB standards have been developed by IFRS Foundation. Then IOSCO, International Organization of Securities Commission, they have also endorsed the IFRS S1 and 2, and they are asking the jurisdiction to adopt the IFRS S1. This is a big achievement. Then International Auditing Standard Board, ISSA 5000, it is being developed to ensure the auditing of the climate and financial and sustainability reporting the standard. The auditing standard has also been working to issue for the preparer that their sustainability disclosures are being audited. Then there are different jurisdiction standards like TCFD, TNFDs, and like in European standards. They're also endorsing the ISSB, and they're working in collaboration with that. Then I have also explained the IOSCO stand for International Organization for Securities Commission has endorsed the ISSB standard. Then ISSA 5000 stand for International Standard on Sustainability Assurance 5000. This ISSA developed by the International Auditing and Assurance Standard Board. It is titled General Requirement for Sustainability Assurance Engagement. Its purpose is to serve as a comprehensive global benchmark designed to enhance the credibility, comparability, and trust of corporate sustainability and ESG, environmental, social, and governance reporting. So the accountants in Saudi Arabia and all the Gulf states have to be prepared for the audit under the ISSA 5000. So the scope is framework agnostic, meaning it can be applied to sustainability information regardless of which reporting framework is used, like IFRS S1, S2, or GRI or ESRS. Any reporting can be audited under the ISSA 5000. And you can find further detail by using this link I have shared on the bottom of the slide. Shri, can you now launch the third question? We are moving to the last component of the prepare module. I think you are understanding well on the requirement of IFRS S1 and S2. Please, I would like to hold this question further, and you will share it later on. Then there is an overview of IFRS S1 and S2 global baseline. Some of the important terms which the preparers have to understand, that what are the sustainability standards and what is the main important terminology which is to be understood. The sustainability reported financial information, what is that? The information about a company's sustainability related risks and opportunities that is useful to the primary user of general purpose financial reports in making decisions about providing resources to the company. IFRS 1.1. This is the main purpose of sustainability reporting standard IFRS S1, that it has to provide decision useful information about the risk and opportunities of the company. For what these information is to be provided to the provider of the resources, the investors, lenders, creditors. Then sustainability reported risk and opportunities. What are these? These are the risks and opportunities that could reasonably be expected to affect the company's prospects, that is cash flows, access to finance, or cost of capital over the short, medium, or long term. This is IFRS S1 requirement 1.3. And general purpose financial reports. These are reports that provide financial information about a reporting entity, including its financial statements and sustainability related financial disclosures. So you can see these now both the reports, the financial statements and sustainability related report, they have both to be disclosed. The sustainability related risk related financial disclosures could be included in the company's management commentary or in a similar report where this is part of the general purpose financial report. So this is important that we have to understand what for the IFRS S1 stand and what for it is bent, and how to report and which information is reported. Then these are the four core pillars of the IFRS and S1 and S2. These four pillars: governance, strategy, risk management, metrics, and targets. Whether you are using IFRS S1 or S2, these four pillars would be used in the same manner. Because I am merging both the IFRS S1 and S2, and here I would like to inform you that you cannot use IFRS S1 or IFRS S2 in isolation. Rather, both the standards have to be used in interjection with each other and in combination with each other, because IFRS S2 is just climate related financial disclosure of the company, but all the other general requirements are defined in IFRS S1. So both IFRS S1 and S2 have to be understood and applied simultaneously. So what is these pillars? I will discuss in detail about each of them. The governance, the governance, what is governance? Governance is processes, controls, and procedures to monitor, manage, and oversee sustainability related risks and opportunities. Then strategy, company strategy for managing sustainability related risk and opportunity, how you identify and manage the risks. And then risk management, the process used to identify, assess, prioritize, and monitor sustainability related risk and opportunities. And last is metrics and targets, how you measure the target set in relation to the mitigation of sustainability related risk and opportunities. Then IFRS S1 show the general requirements. Ask for material information about sustainability related risk and opportunities with a financial statement to meet the investor information needs. So these are general requirements which you have to consider. Now, what is the purpose of IFRS S1? It requires material information to be disclosed. So materiality concept is the same as which is adopted by the International Accounting Standard Board. We will further discuss it later on. And sustainability related risk and opportunities we have to disclose with the financial statement to meet the investor. Not only now we have to not only focus on the financial statement and only the figures and the past data, but you have to disclose what are the risk and opportunities, both expected and the current risk and opportunities on which the business is depending and have to address them. Then applies task force on climate related financial disclosure, TCFD architecture, that IFRS S1 required that you have to use governance strategy, risk management, targets and metrics, and 4 pillars in reporting. It requires industry specific disclosures. This is very important. Then businesses, because there are several industries and each industry and business have their own specific risk and opportunities based on their presence and the geographical location and their industry specific requirements, like SASB standards. The Sustainability Accounting Standard Boards as they have been adopted by the IFRS Foundation, IFRS. So it has already issued 77 standard industry specific standards, and the IFRS S1 requires that each company has to use the industry specific standard under the IFRS Sustainability Accounting Standards, SASB standard. Then sources of refer to sources to help companies identify sustainability risks and opportunities and information beyond climate. IFRS 2. It requires that the company can use several support and guidance material available at the IFRS Foundation website, and also you can find many material on other sites, UNSSE, United Nations Sustainable Stock Exchanges. They've also issued many guidelines on adopting the IFRS S1. It is not that you have to start from scratch. A lot of material is available on the website of IFRS Foundation and UNSSE, and you can also find on CDP and GRI or GHG protocol. You can use these sites and found the relevant material for you. Then can be used with any accounting requirements gap. These standards are not separate from or independent of financial statement. These are interlinked and they have to be used for the IFRS or gap standards. Any accounting standard which you're using, you can use in interrelationship with these standards. Then IFRS 2 climate-related disclosures. What are these? The core requirement of IFRS 2 are it incorporates the TCFD recommendation, the Task Force on Climate-related Financial Disclosures. The IFRS 2 is totally based on TCFD recommendation. To meet the investor needs, IFRS 2 is issued in accordance with IFRS S1. IFRS S1 is to be applied in accordance with the IFRS S1. Requires disclosure of material information about climate-related risk and opportunities, including physical and transition risk. In the early part on IFRS S1, we have seen it relates to the sustainability reported disclosures. And the difference between IFRS S1 and S2 is that IFRS S2 only deal with climate-related financial disclosures, whereas rest of all the risk and opportunities relating to the sustainability, they are dealt in with the IFRS S1. So they require industry-specific disclosure, just like SASB standards. So these are the specific requirement of the IFRS S2. Then IFRS S1 and S2 together, what they require? IFRS S1, S2 is to be applied in accordance with IFRS S1 because as I have already told you that both the standards are not to be used in isolation, rather they have to be applied simultaneously and in connection with each other. IFRS S1, because why we have to use IFRS S1? Establishes important conceptual foundation, connected information and value chain. IFRS S1 defines these important elements. We will discuss what is connected information and what is the conceptual foundation and what are the value chains. It provides important guidance on the assessment of materiality. Then again, IFRS S1 explain what is the material information. Without using IFRS S1, you cannot go to IFRS S2. Then sets out the characteristics of the information to be provided, the relevant and faithful presentation. This is explained in IFRS S1. It also sets out requirements and concepts for reporting. For example, the reporting company, timing and location of the reporting company, and connection and comparative information in reporting. So IFRS S1 sets all general requirements that how and what to be presented, either in IFRS S1 or S2. So the important point here is that the standard have to be applied for both for the same company, for the same reporting period, and they have to be interlinked, and communication should be in such a way that the financial report reader can assess and understand what are the sustainability and climate related risks which the company is facing, and how the company is governing these risks, how the company is mitigating and managing those risks, and what are the opportunities which the company has identified to tackle the risks and opportunities, and how the company has positioned itself in the market for survival and getting the benefit of the opportunities in the low carbon economy. So both the standards are interlinked and dependent on each other. Then the main concept which you have to consider while you are preparing for the financial reporting and sustainability reporting, that it is not that you have to use the standard for the check that we have, yes, we have done this. No, you have to inculcate the standards into your management and into your business strategy, and you have to adopt the standard in true sense so that you can get benefit of the standard, not just to make the legal compliance, regulatory compliance, but you have to get the benefit of the risk, and you have to check the opportunities. So you have to make a fair presentation. A complete set of sustainability related risk financial disclosures should fairly present all sustainability reported risks and opportunities that could reasonably be affect the company's prospects, cash flows, access to finance, and cost of capital. The company's sustainability reported financial disclosure shall be for the same reporting entity as the related financial statement. So you have to report both the disclosures, financial disclosure, as well as sustainability and climate related disclosure for the same company. Reporting entity concept has to be adopted in this sense. Then connected information. This is very important. IFRS S1 asks for information that enables understanding of the connection between sustainability related risk and opportunities, connection between disclosures on core content areas that are the governance, strategy, risk management, targets and metrics, and sustainability related financial disclosures and financial statements. So the connection between both the reports should be simultaneously interconnected. The risk and the opportunities have to be interconnected. The information should be linked with all the four core content areas. So there is a requirement of complete disclosure with all respect, and the information should be interconnected. ये नहीं हो सकता कि आप इंफॉर्मेशन को जो है ना वो सस्टेनेबिलिटी इंफॉर्मेशन को आप डिस्क्राइब करें और they are not linked with the financial statements. So the risk and opportunities have to be interlinked and connected with the financial statement. The reader should know कि हाँ जी अगर if the company has decided to impair the assets, and that the effect has not been shown in the financial statement, and you have to show that impairment effect will be that much, and it would be happening at that time. So Shafiq, can you launch the third poll? No, before that, third poll, this fourth one. Connected information. Previous poll. So I am also disclosing this question here. What information should be considered for connected information? Select all that apply. Yes, this poll. Kindly you select what is the relevant answer. Which information should be considered for connected information? Either it should be a connection between governance, strategy, risk management, and metrics and targets, a connection between sustainability related financial disclosures and financial statements, or sustainability related risk and opportunities. What connection should be considered? So I have also displayed here governance, strategy, risk management, metrics and targets, connection between these, or sustainability related financial disclosures and financial statements, and the connection between sustainability related risk and opportunities, or all of these, which are the connected information which the standard IFRS S1 S2 requires you to consider while reporting on the sustainability related risks and opportunities. How you have to report. So please answer what is relevant for you to you. Now we will be moving toward the yes, all answers are right and correctly answered. It is the connection between all the information. All of you are correct, and congratulations for the correct right answer. Now the very important information, as all of you are most of you are accountants, and we consider the concept of materiality. While we are auditing the financial statement, we consider what is material to be reflected. And in the sustainability reporting, the concept of materiality has been taken from the International Accounting Standard Board. So companies shall disclose material information about the sustainability related risks and opportunities that could reasonably be expected to affect the company's prospects. And what is material information? The information is material if omitting, misstating, or obscuring that information could reasonably be expected to influence decisions that primary user of general purpose financial reports make on the basis of those reports. So this is the same definition which the IFRS accounting standards have adopted. So this is the building block approach and the interoperability between the financial standards and the sustainability standards, so that the reports are decision useful and easy to understand. The primary user of general purpose financial statement reports are, who are the primary purpose users? Existing and potential investors, lenders, and other creditors. So you have to focus. The IFRS S1 and S2 focuses on the requirement of the investors. So these standards are used with the lens that how the investors are looking for the information which is material to them. So next, this is the question of water is a vital input to your business, but ISSP standards do not currently have a specific standard on water. What you should do? Either do not disclose anything about water. Second, consult the sources of guidance issued by ISSB. Third, engage a consultancy to help. And fourth, copy your competitor's report. So, as I have explained earlier, that ISSB standards have issued and built on several other reporting frameworks. So the other reporting sources of guidance are available. So this is a question for you: what you should do in this case, that if any specific element or the sustainability related risk or opportunity on which no standard definition has been provided or no standard guidance has been provided, like water is a vital input to your business, how you would address this risk or opportunity? Can you answer any of the four? What you would do? You can write in the chats. So I would like to clarify that you have to answer any of the A and B. B and C. B and C are correct answers. The most correct answer is B. Consult the sources of guidance. issued by the ISSB. If the water is the critical element for your business, so for example, if your company is based and is concerned and linked with the agriculture products, then without water you cannot survive. Likewise, if your company is data driven company like Google or these companies which are data centric companies, they require huge amount of water to cool down their the data centers. If the area where the company has established their business is water scarce area, then after 2-3 years the company would not be able to run their businesses. So this is a big risk to the survival of the company. Even the going concern is not possible. So as we have shown in other earlier slides, that going concern IFRS accounting standard, you have to disclose that we are not able to run the company because of scarcity of water. So you have to disclose this risk, and for that you can use the CDP guidelines or SASB guidelines on or CDSB guidelines which are available, or GRI guideline on water. So the related sources of guidance are available. You can't say that because ISSB has not provided any guideline on water, so we have to avoid it. So this is the purpose of using the related guidelines. So this is the summary of first module, what we have learned so far. Start by understanding the benefits of improved disclosure, why we are disclosing, and there are internal benefits and external benefits. External benefits are we have to focus on investors' requirement and interest. We have to fulfill their requirements and needs. And internally, we can enhance our resilience and strategy from applying the ISSB standards. This is the internal and external benefit of adopting IFRS S1. The use of ISSB standards as a baseline, build on top of that. ISSB standards represent a global baseline for sustainability-related financial disclosures that simplifies the landscape and provide a comprehensive foundation of disclosures that allows other building blocks of information to be added on top of ISSB. So the purpose and the objective of this paragraph is that IFRS S1, S2, they are not standalone standard. They are built on several other standards. So you have to look into all the standards which are building blocks, and they are not in use as a competitor, but they are complementing the IFRS S1, S2, and you have to see the different jurisdictional standards which are available, and they are interoperable with each other. Like like ESRS, the European Sustainability Reporting Standards, they are also aligned with ISSB. Likewise, there are different jurisdictions. In Japan, they are also issuing the standard in line with the ISSB. China has issued their standard in line with ISSB. So these are the global baseline which are interlinked with each other, interdependent in each other. Be clear who are your audience. ISSB standards plus guidance are designed to meet the needs of primary user of general purpose financial statement reports and follow the core principles of financial disclosures, including the fair presentation and connected information. So primary users are the investors. So we have to focus our entire reporting for the need of the investors. These are not general purpose disclosures. It is not like whatever the sustainability related risk and opportunity, we have to disclose it. And whatever the climate related risk or opportunity, we have to, not every climate and sustainability reported risk, but we have to report only the material information which is investor specific and which can affect the investor decision making. So at the end of this module 1, I would like to request you to plan for an activity to adopt, how you can, when you go back, what you will get benefit of that, how you will define the objectives for your sustainability disclosures, setting the goals, be clear on what you are trying to achieve through our sustainability disclosures or any plans to adapt them. And you have to define the requirements, identify what reporting requirements you are seeking to meet through your disclosures, such as the jurisdictional requirements or standards. In the Saudi Arabia market, I have disclosed several initiatives which the VN 2030 has been issued by the Saudi government. So you have to check what is the VN 2030, and you have to align your company's reporting according to the standards and according to the objectives set by the VN 2030. So each one of you, I would request to please read and go through the VN 2030 and look at your company's own status as per the sustainability reporting risk and opportunities. Consider where you are now and what is missing in your current disclosure to allow you to achieve this. This is the gap analysis you have to do. And for this, you can get help from the Transition Planning Transfer TPT website. You can go to that website, and there are an UNSSC or IFRS Foundation website, and you can get guideline on gap, how the gap analysis is done. So now we are moving toward the second module, setting the direction of applying the ISSB standard and integrating additional disclosures. Applying the standard additional disclosures. What does it mean? Applying the IFRS sustainability disclosure standard as the global baseline, as we have already discussed. So the core content areas we have to consider are governance strategy, risk management, and targets and metrics. So now we are moving towards how to align with the our circumstances, processes, control, and procedures to monitor, manage, and oversee sustainability risk and opportunities. The governing body who are responsible for the overall management of the sustainability related risk and opportunities. Now, what we have to ask about our company's presences, circumstances to address the governance model. Which board and management bodies or committees are responsible for sustainability and climate related risk and opportunities? When this question you ask, then you will find that either there is any committee or not, either there is any board committee or not, which is taking care of the sustainability related risk and opportunities. What are their skills and competencies? Now you have to look at if they are able to manage and control the sustainability related risk and opportunities. What processes and controls do they use for managing risk and opportunities? If there any process or control is there existing or not. So this is an important question. How and when do they get information about risk and opportunity? If there is any body is set and established, committee is established, what is the time frame, how they get the information about the risk and opportunity, and who will be providing? What are their roles and responsibilities? The governing body, what they will do? What is their responsibility? What sort of decisions do they make, and what targets do they set based on risk and opportunity? So these are the questions which, if you ask sitting in your organization, you will find many answers and the pathway to towards the adoption of the IFRS S1 and S2. This is helping you. How are related performance metrics included in remuneration process? Now, this is another important issue. That when you are assigning additional tasks to the management, especially the top management, how you are going to compensate them when they have to perform additional tasks of the sustainability and the climate related disclosures. They have to put special efforts. So you have to link the remuneration policy with the adoption of the IFRS S1 and S2. So this is an example from UBL, how they have set their governance model. So you can see from the bottom, ESG manager and analyst. They are setting at the bottom, looking for all the environment, social and governance issues of the bank. Then they are headed by head of the sustainability, ESG and climate risk, Pakistan and GCC. They have established an international committee on risk and climate, ESG and climate risk for Pakistan and GCC. Then they are on the top, they are headed by group executive, international and countries general managers. They drive and execute the ESG and climate risk strategies and policies in international operations. So this is on the top of that. And these are headed by various five chiefs. Chief Risk Operation, which oversees ESG and climate risk implementation across the risk classes. Then Group Executive Human Resource, then Chief Financial Officer who oversees financial performance pertaining to ESG and climate risk. Then now most of you are finance professionals. This is your role here. As Chief Financial Officer, you have not only to report on the facts and figures on the historical data, but now you have to focus on the ESG performance and climate risk, how you are going to integrate the climate and ESG risk into the financial reporting. Then Chief Operation Officer, he oversees integration of ESG and climate risk into operational activities. Look at this. Then Group Executive Compliance, oversees regulatory compliance and tag. So this is the fourth layer, and above that there are two committees: Management Risk Committee and Compliance Committee of Management. These also are responsible for the climate and environmental risk. Then above that, there is a Board Risk and Compliance Committee, supports the Board of Directors in fulfilling its duty through respective responsibilities and authorities pertaining to the ESG. The Audit Committee, it also performs the ESG and climate risk management, the Audit Committee. And these committees report to the overall Board of Directors and who oversee entire management of the risk. This is the whole governance matrix and model which is adopted by UBL. If you go through the UBL Bank Sustainability Report, I will share the link in chat as well. You will see how effective they have been planning on these through the governance model. This is another example from international company Yara, Integrated Report 2024. So I will just simply highlight the core concepts, how the governance model has been set. The sustainability network is at present at the base, which provides a network of cross-functional departments. Above that, there are sustainability governance, integrated reporting material, company performance, and human resource department, ethics and compliance, global climate energy, corporate affairs communication, HSQ, global optimization and procurement, operational units. These all are reporting on the climate related risk and opportunity to the group executive board. Then now these group boards are supported by HR committee, CEO performance, which oversees the CEO performance and compensation and executive remuneration, people strategies and the employment, and then board audit and sustainability committee, BSC, supervises supervision of accounts, reporting, internal control, risk management, and external audit. These committees help the board of directors, which are shown in the brown tabs. So these committees, corporate committee, executive committee, and nomination committees, these committees are all linked and supporting the top management on the environment and the compliance and of the risk and management, environment and sustainability risk. So this is the Yara integrated model. This is another example of governance model. You can see the president and group chief CFO, CEO at the bottom, which is supported by audit committee, nomination and remuneration committee, risk committee, and they are supporting the non-executive board of directors. They all are responsible and reporting to the overall board of directors, and they are linked. This is what I am trying to say, that ये नहीं है कि आपने एक पर्सन को रिस्पॉन्सिबल करार दे दिया कि वो जो है ना वो गवर्नेंस करेगा तमाम कंपनी की. These all factors are embedded in all the organizational departments, and heads are responsible for governance of the risk and opportunities organization is facing. The governance के बाद second जो है वो सेकंड जो है वो पिलर वो है स्ट्रेटजी. द company strategy, how to mitigate the risk and opportunities, how to manage the risk and opportunities. So this is for your information that how the companies in India are working on sustainability. General आपको मैं ये आपकी information के लिए बताऊंगे what is sustainability and how the companies around the world are in taking benefit of sustainability. This is not a burden. You should not take it as a burden. Rather, the sustainability has to be taken as an opportunity to get rid of the high emission and cost-driven assets and operations. Excuse me. I think we can have a break for the Maghrib prayer.
Yusuf, Mr.
can-
Yusuf, we have only like 15 minutes remain. So
Okay.
have to finish this within the time. So I think if you can quickly wrap up, because we have some questions also we have to answer.
Okay.
Thank you.
Okay. So you can see at this example of coal Indian Railway. Question to evaluate the risk strategy, risk and opportunities. What risk and opportunities that could reasonably be expected to affect a company's prospects that have been identified over what time horizon? It is if it is climate-related risk, is it physical or transition risk? So we have to identify the risk and opportunities by identifying the risk and the time horizon over which these risks can be happening. And there are two types of risk: physical and transition risk. This is an example which can identify the risk not only in terms of the transition physical risk, but there are also they are indicated the long-term, short-term, and also the scenario analysis have been done. You can look at this Mondi Group report, which I have shared in the transition. The time horizon is very important as compared to financial statement, where we have to close the financial statement within one accounting period, for example, January to December. In case of financial sustainability reporting, the risks and opportunities are not in this time frame. It depends on the nature of the risk, and over the long period of time, you have to check that when the risk is to be impacting us. How the strategy is to be evaluated, what are the current and anticipated effects of the risk. If you have identified the risk, then what you have to see the current and anticipated effects of those risks and opportunities on the company's business model and the value chain and strategy and decision making and financial position, performance and cash flow. What type of effect is expected and where within the company's value chain or operating location will that effect take place? And what is the actual and planned response to the effects identified? So these are the elements which have to be taken care of defining a strategy. Quantitative versus qualitative disclosure. So this is important that how you have to disclose. Either you have to just quantitative information has to be provided or qualitative information is required. When reporting the effects of sustainability related risk and opportunity on a company's current and anticipated financial performance, financial position, and cash flows. A company is required to disclose both quantitative, single amount or range, and qualitative information. So this is very important that you have to work out the quantitative impact, the financial impact of the risk and opportunities, both current and anticipated. This is not only like financial statement that we have to report the past event. Now you have to focus on the current and anticipated risk and opportunities and the impact on your financial performance, cash flows, and financial position. A company can provide qualitative information. This is the relief provided to the company when they can only provide the qualitative information rather than quantitative information, when the financial effects of risk or opportunity are not separately identifiable. The second thing, if they are not separately identified, they are mixed and you cannot segregate the impacts. The second condition is there is a high level of measurement uncertainty. You cannot have the certain information about the level of the sustainability risk. And for anticipated financial effects, quantitative information will not be commensurate with the company's skills, expertise, and resources, or the company is not so sound or technically effective that it can reflect the quantitative information. So in these conditions, only qualitative information can be provided. This is a Unilever example. They have assumed the three risk scenarios: 1.5, 2 degree, 3 degree, 4 degree. So they have indicated the 2020, 30, 2029, 39, and 2050, both in terms of the financial and the quantitative and qualitative risk. So this is an example of strategy how the Store and Ensa company, they have planned a strategy where they are standing in 2006. The traditional sale of was 70% paper and wood company. They were depending on forest pulp, traditional wood products, but now they have changed their strategy towards the sustainable solutions and sustainable packaging solutions. In 2020 to 2024, they have shifted towards the sustainable solution. 53% of the product business would be shifting towards sustainable solution, and 47% is the traditional solution product. And in 2030, they are planning to go up to 80% on the strategic growth areas, as compared to 20% only with the traditional non-sustainable products. Now this is a question we can omit it. Then climate specific considerations strategy. As we are discussing both the S1 and S2 jointly, so what is the specific consideration we have to consider while disclosing on the climate change? IFRS S2 requires the company to refer to and consider the applicability of the industry-based disclosure topics like SASB, provide detailed information on where in business model and value chain risk and opportunities are concentrated. So this is also important that in the business model, not only we have to look into our own organization's risk and opportunities, but we have to concentrate and look into the value chain. The IFRS S1 and S2 are considering not only your own business, but all the value chain partners which are on which you depend, all the suppliers, all the vendors, and all the services and product providers. And also you have to look into the value chain from the production up to the delivery. It also covers the production of the products and services, and how they are consumed by the customers, and their impact up to the disposal of the product. The whole value chain is to be considered. Provide detailed information on effects of climate-related risk and opportunities. So you have to inform and provide all the risks. Use criteria for when quantitative and qualitative information is required for disclosure of current and anticipated financial effects. Use all reasonable and supportable information that is available at the reporting date without undue cost and effort. And this is also important that you have to take entire information which is already available through the sources of guidance of IFRS S1 and S2, and through various other frameworks. You have to check the available information, and you don't have to put more cost on finding the information where your cost benefit analysis get negative. Use scenario analysis for resilience assessment, but it does not specify the particular scenario to be used and provide information regarding resiliency. So the climate-related risk and opportunities have to be considered on all these aspects. We have to be careful in reporting and analyzing, that we have to go not beyond our resources. So we have to, the policy has to be commensurate with the assets and technical resources of the company.
Mr. Yusuf, I think we have to conclude because we have a few questions also to be
Okay,
answered.
okay,
So
okay.
I think when we will share this presentation with the audience, they will read it and understand. And if they will have any question, they will ask directly. What do you think?
Definitely, we can conclude this because this is a long presentation and we have to look
Yes.
into detail, but we can conclude it here. And if you have any questions, then we can answer them right now.
Great, great. The first
Thank you.
question is from Khurram Shehzad. He is asking what control ensures S1 disclosure are consistent with the financial statement estimates.
Hmm. Actually, the IFRS S1 and S2 are designed in a way that the information related to the sustainability have to be linked with the financial information. You cannot say that we are developing the sustainability reporting disclosures in isolation, and they are different and they have to be separately reported. Whatever information you are disclosing, that has to be disclosed in the financial reports at the same time, and that has to be cross-referenced. So the information is linked between the financial information, and there's a link between the sustainability related information. Whatever the cost and effects on your performance, financial position, or cash flows because of the sustainability and climate risks, you have to link with the financial statements. You have to reflect on your company's cash flows, financial statements, and the statement of financial position balance sheet. So they have to be reflected at the same time so that the investor is able to understand that these costs and the capital expenditure or other expenditure or the asset changes have been done because of the sustainability and climate risks and opportunities. They can be positive or negative.
Okay. Next question from Mr. Fahim Arshad. What if a company does not have complete climate related data? What are the reporting expectation?
So this is very important, and to start with, you don't have to be worried about entire data because data collection is very critical and important when you are starting. Then you have to first look into the available resources. So there are a lot of resources available in the IFRS Foundation website and UNSSC website. You can start with little information, whatever you have. Say, for example, you can have the GHG emissions, scope 1 emission information, which relates and depends on the sources and the assets controlled by you. So the vehicles and the other asset which you control. The emission generated by the vehicles, or company's own vehicles and operating assets. You can have the data of the cost incurred on the electricity billing and the emission generated by the vehicles you are using. So you can collect the data internally, whatever available with you. And for the rest of the data, you have to check your competitors' information, how they are reporting, and you can check the IFRS Foundation, the Knowledge Hub, and how you can collect the data from other scope 2 emission and scope 3 emission. So you have to start from basic information, and with the passage of time, you keep on collecting and topping up your information for the better reporting. So it is not easy task. You have to start from now planning about your future reporting. This is the first step and important step. So it is not mandatory to disclose all the information completely on the day one. So you have to go step by step.
Okay, thank you. Next question is from Rania Bibi. She is asking, company should work on gathering climate relevant data. Should also disclose their limitation during improvement. Yes, Rania, you have to disclose the limitation and the sources of the data. And if any data is incomplete, you have to disclose in the particular area, so the user can understand. This is a normal practice in financials reporting, that if you are having limited data, you have to disclose it. Another question from her: expectation apply when climate data is unavailable or incomplete. The company should disclose the same question. I think this is the same question. Next question
Yes,
is from Khalilur Rahman. We are currently facing a potential conflict between our financial reporting and our new sustainability disclosure. Our financial model and impairment test under IAS 36 assume a 15-year remaining useful life for our core assets. However, our IFRS S2 climate risk assessment identifies physical risks that could make these assets unavailable within 7 years. Means there is a difference in IFRS as per IFRS 36 and as per S2. How can we formally reconcile this discrepancy in our disclosure to ensure we satisfy both IFRS S1 and IAS 36 requirement without inadvertently triggering an immediate impairment charge or breaching our current debt convenants? Yes, Mr. Yusuf.
This is very important and pertinent question, and this is the area which most of the companies are facing because IFRS S2 is the future-looking, future-forward standard, and on which we have to develop our strategy, and we have to reflect. There is a requirement, and you can make a disclosure in your current financial statement, because this risk is a medium-term risk which is coming up to 5 to 7 years. Or you can reflect in your financial statement that we are anticipating the physical risk, like the forest fires, if their company is in the forestry business, or there is acute risk of water shortage, or there is a similar risk on the degradation of the fertile soil, if they are the agriculture business. You can disclose this information in terms of the quantitative and qualitative way, if you have data that these assets are going to be depleted, and their impairment has to be recorded, because the financial information and the asset useful life, as per the accounting standards, we all know that useful life is the life on which the asset can be effectively used toward the revenue generation. And if the impairment testing is done, and the IFRS S2 and the climate risk are identifying that you cannot be able to use this asset more than 7 years as compared to accounting estimate of 15 years, then there is no question of retaining the asset up to 15 years. You have to re-evaluate the depreciation charge and reassess the asset useful life, and you have to disclose this fact in your financial statement, and also the sustainability and climate related risk, that this is the reason why we are re-evaluating the asset, and we are reassessing the depreciation charge. So this is not the conflict. Rather, though this is a conflict, but we have to consider IFRS S2 because this also have the same power of implementation as the IAS accounting standards. So you can disclose it fully for your investors and your regulators. So there would be no problem in reassessing and reevaluating and reflecting the asset at the revised cost on the basis of the information available to you on through the climate-related risks.
Okay, thank you very much. Unfortunately, we cannot take any further questions because we are already crossed the time. I am very impressed and got a lot of information. I wish we could have more time and we could have learned from you more. Now, I would like to hand over the mic to Mr. Hamadur Rahman again. Yes, yes, Hamad.
Thank you very much, Wasim. I can understand that the topic is so wide that it will be very unfair to ask any speaker to provide a detailed presentation within only 2 hours of time frame. But also I will take this occasion to request ICMA KSA branch council to please keep arranging such webinars on such important topics. As now we have come to the conclusion of today's webinar, I would like to extend my sincere appreciation to everyone who joined us today. Today's discussion has highlighted the growing importance of integrating sustainability related and climate related disclosures into financial reporting. We have gained valuable insights into requirements of IFRS S1 and IFRS S2, the practical challenges organizations may face during implementation, and the best practices that can support effective and credible sustainability reporting. On behalf of ICMA International, the ICMA KSA Branch Council, and the National CPD Committee, I would like to express our heartfelt gratitude to our distinguished speakers. A special thank you to Mr. Muhammad Yusuf Khan, FCMA, for his insightful keynote presentation and for sharing his extensive expertise in sustainability, corporate governance, ESG integration, and SDG aligned business practices. I would also like to thank Mr. Wasim Ahmed, FCMA, for his excellent hosting and valuable contributions throughout the session. His practical perspectives and professional experience greatly enriched today's discussion. Our sincere thank also go to all participants for your active engagement, thoughtful questions, and commitment to continuous professional development. Your participation made this webinar a meaningful and interactive learning experience. Once again, thank you to our speakers, organizers, and participants for making this event a success. We look forward to your continued association with ICMA and to meeting you again in future knowledge sharing sessions. With these words, I formally declare the webinar closed. Over to you, Hira.
Just one small announcement that if any member or anybody who wants to appear as a presenter, or you think that we should Saudi Branch Council should address some issues which we are missing at the moment, so just approach to me or any branch council member, and inshallah we will try to approach you and train you for that topic. This is a small announcement. Yes, over to you, Hira, if you are available.
And last information and announcement
Yes.
from my side is that I would be sharing a brief survey feedback form, and I would request all the participants to share your feedback and questions through that survey, so that we can help you in understanding better way and your future requirements regarding the sustainability and the climate related disclosures. Thank you very
Okay.
much.
But people are also asking your presentation also, so you can share with me, and I will share with ICMA, and then we can send it to the participants, or I can directly.
Definitely.
Perfect.
Definitely.
I think that's it. Thank you very much, and Hamad, thank you very much for you also. And with that, thank Lord, we are ending our seminar. Thank you very much.
Thank
Assalamu
you.
alaikum.
Thank you all. Walaikum salam.
Thank you very much for entire management also the branch council and all the participants who have joined it. Thank you very much. Assalamu alaikum.
Thank you. Walaikum salam.